Get started, Melissa?
Let's do it.
Great.
Thank you.
Hi, everyone. I'm Jason. This
I'm
is
David.
and we're very excited to be here today. We're going to talk about cryptocurrency and our approach to investment and valuation of a technology-based asset class. So let me share my screen. So we will call this, what we like to call this, the cryptocurrency asset class. And we're going to do a little bit of a deep dive and cover a variety of topics. And at the end, there will be time for Q&A. But first, I want to thank Melissa and the Harmony Club for having us to present today. So without further ado, I will cover now what we're going to discuss. So we'll give you a brief background about ourselves, and then we'll jump into what we call a paradigm shift, go into a brief background on cryptocurrency, talk about the macroeconomic backdrop and what's going on in the economy, especially in this pandemic economy, jump into the crypto asset class, take some time to be forward looking, and at the end we'll stop for questions. So my name is Jason Leibowitz. I am the co-founder and CEO of Lebo BTC Ledger Group, but I'll give you a brief background on myself. I graduated George Washington University in 2008 and started my career on Wall Street in fixed income sales and trading. I first heard about Bitcoin in 2013. I invested and I quickly became captivated by the technology. I left fixed income in 2014 to start one of the first hedge funds that traded cryptocurrencies. I joined Credit Suisse in 2016 as all the large banks of the world were getting involved in leveraging the technology behind Bitcoin called blockchain technology. So I helped run their blockchain technology team. And then I started Lebo BTC Ledger Group earlier this year. And as some of you may know, cryptocurrency is a complex technology. It's not easy to invest in, especially in significant size. So our firm works with high net worth individuals, family offices, and institutions, helping our clients invest safely and securely in this nascent asset class. I'll turn it over to David.
Hi, folks. My background is having started in fixed income in Wall Street in 1981. It was the start of what's known as a super cycle. Paul Volcker had just raised interest rates to 20% to try to kill the inflation that was manifest by some number of years of energy-led splurges. And we saw inflation downtick steadily from 20% to close to zero through the 2008-2010 Great Recession, and finally through now in COVID. My background was fixed income first.
The overall theme here is that we need to, this really is the case for
Ms. Furring, can you please mute your speaker?
Sorry.
But again, I'm not ready to help growth, and especially not fast.
Oh my gosh, I'm sorry. I'm on the wrong thing.
Meeting organizers should be able to mute everybody.
Jason and David, you can mute all besides yourselves. So we just mute all speakers.
We have our CNBC exclusive defense survey that Steve Leisman does all the time. And I think the most...
Okay. Sorry about that, guys.
No worries. Anyway, just summing it all up, every input that I had through a 39-year career as a hedge fund trader was central banks. Central banks were the mechanism by which I managed risk and by which the world sort of operated to push momentum into and out of overheating or underwhelming economies. We're going to start the presentation with what we think is brought Bitcoin forward, which is a paradigm shift. A paradigm shift is a fundamental change in approach or underlying assumption. Bitcoin is first and foremost a technology, and it was born in the age of the internet. The first paradigm shift that we'll talk to is the Great Recession of 2008 to 2010. rates were slashed by central banks to near zero on the back of a mortgage crisis, forcing investment portfolios out of fixed income assets into more risk-oriented assets to find yield. Whether you had money in a BlackRock portfolio or were invested through your teachers union, portfolio managers left fixed income for equity investments, and S&Ps boomed. The intended consequence of central bank action was to force money out of fixed income into the real economy, i.e. equities. And as we know, stocks rallied from 2010 through the 2010s. Post the peak of pandemic fears, ultra low interest rates should do the following. They should once again push stock prices up. We believe that stock prices will see new all-time high PE ratios, and I don't mean marginal new highs. There's no place to put money right now. Roughly 50% of a balanced portfolio was in fixed income. Your portfolio, if you own bonds, has matured. If you own a fixed income asset right now that's yielding 5%, you don't own a safe haven asset anymore. You might own an emerging market bond. You might own a corporate bond that has risk comparable to an equity or comparable to a commodity, but it's no longer a safe haven asset of a secure fixed income flow. Therefore, there's a reassessment going on, and that reassessment is forcing people out on the risk curve. Equities first. Secondly, a positive impact of safe haven search is going to gold. It always has been a 5,000-year-old store of safe value. The effect of this is to force investors to seek returns in other asset classes, such as real estate, venture capital, private equity, and last, and what we're talking to, are cryptocurrencies and new technology.
So now we'll go and give a brief background on cryptocurrencies. Digital currency is not as new as you may think. There have been actually many attempts at creating digital internet-based currency or money since the 90s when the internet first became ubiquitous. However, all of them failed for one reason or another until 2008. In 2008, a white paper was released on an internet forum that had solutions to all the problems that plagued previous attempts at electronic cash. The white paper was uploaded by a user on the internet forum who went by the screen name Satoshi Nakamoto, which as we know now is a pseudonym. Bitcoin solved all of the problems where others failed, including the double spend problem. Now, this is an important one. So take, for example, that you had a $100 gift card redeemable at thousands of retailers online. What's to stop you from simultaneously using the unique barcode on your gift card at multiple different stores? Bitcoin solved for this using a publicly viewable, internet-based accounting ledger that updates in real time called the blockchain. On the internet, you can copy and paste any number of times. That was a problem in previous attempts at digital currency. But Bitcoin innovated on past attempts to create a finite supply of tokens in its economy. Bitcoin was in part modeled after gold, which, as we know, has a limited supply as well. And so what Bitcoin created was the very first internet version of digital scarcity. If you lose your wallet in real life, you can replace everything in it except for the cash. Bitcoin is digital cash, so similar to paper money, if you lose it, it's gone. There are no chargebacks such as with credit cards. Our company helps eliminate that risk for our clients when they invest. Bitcoin is a decentralized currency. There is no person, entity, or government actor behind the scenes in control of this technology. It is decentralized. And lastly, because it's decentralized, the code is open sourced. for anyone to inspect and analyze on the internet. There are no backdoors and no ability to tamper with the code. So back to Satoshi Nakamoto. After communicating with other excited cryptographers on the internet forum, this person decided to work collaboratively with anyone who wanted to contribute to build the code base and release it online in an open source fashion for free. And so January 3rd, 2009, Bitcoin was released on the internet. Embedded in the message field
Hold on 1 second. I gotta,
of
hold
the,
on.
sorry guys, if you can just go on mute. So embedded in the message field of the very first Bitcoin transaction was the headline, "Chancellor on the brink of second bailout for banks." This was a headline from a January 3rd, 2009 newspaper called The Times in the United Kingdom. And this headline, embedded with the very first transaction of a new digital currency, implied to many that the creator of Bitcoin viewed it and created it as a reaction to the financial crisis and the unprecedented quantitative easing and debasement of fiat currencies around the world. Bitcoin was viewed as a possible solution if other currencies lost their value. So I'll briefly sum up some properties of Bitcoin. It's strictly online. There's no physical presence. It's accessible with any computer or mobile phone. It's free to use, meaning anyone, anywhere with a mobile phone or computer can access the Bitcoin network. There's no credit agency, government, or bank to stop you from using it. It's open source, meaning, as I said previously, the code in which Bitcoin is based is fully transparent and online for anyone to inspect and analyze. It's decentralized, so there's no government entity or person in control managing the governance of Bitcoin. It's non-sovereign, meaning it's not denominated in any given fiat currency. And lastly, it's censorship resistant. So to define Bitcoin, we like to call it an electronic payment system based on cryptographic proof instead of trust, allowing two willing parties to transact directly with each other without the need for a trusted third party in the middle. And we view digital currency as the third stage in the evolution of the internet, the first stage being email, and the second stage being the web browser. But you may ask yourself, there are over 5,000 different cryptocurrencies, so why is Bitcoin the one you're talking about? Why is Bitcoin the most important? Bitcoin has the longest history of all the cryptocurrencies as the original. It's the most globally distributed with the most users.
Yeah, and I own both of
Everyone,
those.
please mute your microphones, please.
That, you know, we're sometimes trying.
Sorry, let me see if I can. Okay, it's better. Bitcoin is the most immutable of its asset class, meaning that it is the most difficult to tamper with. There's no computer or supercomputer or group of supercomputers in the world that can tamper with the Bitcoin blockchain. And lastly, Bitcoin's code base has never been broken, never been hacked, and never had any downtime. Now, it's important to note that both individuals and entities dealing in cryptocurrencies have been hacked, but all of those occurrences are the result of human error as opposed to any breach of the Bitcoin protocol. And the last thing I like to note is that when you look at the cryptocurrency asset class and all 5,000 plus different cryptocurrencies, Bitcoin's market cap constitutes over 57% of the entire market cap of all cryptocurrencies. So it is the dominant cryptocurrency, the most liquid and the most used and widespread globally. So now let's get into the macro economy and what's going on in the world.
Sure. As said previously, my background was fixed income first. The 2008 to 2010 Great Recession saw central banks slash interest rates to near zero. If you look at the Great Recession, investors fled the low yields of the bond market. S&Ps rallied. As you can see from the following chart, the Fed's balance sheet ballooned and M2 exploded. Another obvious beneficiary was the safe haven of gold. Fast forward to 2020, central banks took out their Great Recession playbook, ramped up their fiat printing presses, slashed rates to near zero and negative in parts of the world in a desperate attempt to underpin a failing global economy. The beneficiaries were again equities and alternative assets.
So now we'll talk about the crypto asset class. As you can see here, this is a chart of 2020 year-to-date asset performance. We put 6 different assets on this chart. You have Bitcoin, gold, the S&P 500, corporate bonds, real estate, and oil. And as you can see from the grid up in the top left, Bitcoin clearly has outperformed all other asset classes, with gold trailing in second. Everything else is pretty much flat to down on the year. And in this unprecedented pandemic year, to find an asset like Bitcoin that's rallied as much as it has is pretty impressive. We also look back 5 years because we really need to zoom out when looking at investing and balancing a portfolio. And you look at Bitcoin's performance compared to the other assets over a 5-year time horizon, and those numbers in the top right speak for themselves. So we like to look at this chart and we keep monitoring how Bitcoin fares compared to the other asset classes in a typical balanced portfolio. It's very important to note that Bitcoin is not correlated to any other asset class over the medium to long term. Sure, everything in the very short term can be correlated, as we saw in the beginning of March when the pandemic news really hit home with everyone. Everything correlated to one, cash was king. Everything that was not cash went down as people liquidated assets, but that was a very short period of time. You zoom out to 5 years, and in this analysis from April 2015 through April of this year, and Bitcoin's average correlation to every other asset class is 17%. And over a 9-year over a 9-year period, Bitcoin has a 209% compound annual growth rate. And so to have 209% and zero correlation to all traditional asset classes is pretty important. We analyzed 2 classic investment portfolios, BlackRock's multi-asset income and Vanguard's managed payout, over a 5-year time horizon from April 2015 through April of this year. We customized each of the portfolios to include a small allocation of Bitcoin. For each portfolio, we included an allocation of 1, 3, or 5% Bitcoin and looked at its 5-year performance. The results were staggering. Both portfolios with a 5% allocation of Bitcoin nearly doubled their performance, as you can see in columns 2 and 3 that we highlighted here in green. So to make it clear for everyone, so you're on the same page as us, the very first row that says BlackRock multi-asset income, that is the traditional portfolio with 0 Bitcoin. In April 2015, it started at $10,000. And after 5 years in April 2020, it was up about 11.1%. It ended the year, it ended the 5-year period with a value of 11,117. And then you go down 1, 2, and 3 rows, and you see with 1% Bitcoin, the initial balance 10,000 ended at 12.6. With 3% and 5%, you can see yourself. And same with the Vanguard managed payout. And we'll take it to the next slide where we compare the best year to the worst year. It's important to note that the 5-year period we chose encapsulated both bull and bear markets for Bitcoin. From 2015 through December 2020, Bitcoin rallied to a peak of nearly $20,000 per coin. It subsequently entered a bear market, bottoming around $3,000 in 2018, before slowly grinding up to where we are today, just shy of $11,000 per coin. While the worst years for all portfolios were nearly identical, as you can see in column 7, the best year for a portfolio customized with a 5% Bitcoin inclusion in column 6 returned close to 80% compared to 15% without. So as you can see in the very first row where it says BlackRock multi-asset income, in column 6 and 7, the best year was up 13.8% and the worst year was down 11.6%. If you go down 3 rows to the BlackRock portfolio customized with 5% Bitcoin, the best year was up 77% compared to an almost identical worst year of down 11.6%. So the takeaway here is a small allocation of Bitcoin insulates your portfolio. You have a similar, the worst years are not much worse with Bitcoin, but the best years are significantly more improved and have higher returns with Bitcoin.
I want to add one thing that many people aren't aware of. People talk about Bitcoin and high volatility. They're right. It does have relatively high volatility to other assets. But an example we like to use is that of Amazon stock. Amazon was born in 1995 or 96 at around $6. In 1999, in the heat of the dot-com bubble, it traded up to $106. And in 2001, it collapsed to $6. So you're talking about one of the great equity performers of our lifetime, also a technology stock that had similar characteristics and similar retracements to Bitcoin. Bitcoin was $250 in April of 2015, went to $20,000, and in 2018 traded down to $3,000 before its recent rally. As we're speaking, Bitcoin is around 10,800. A couple of notes. People talk about Sharpe ratio. A Sharpe ratio is the measurement of the performance of an investment compared to a risk-free asset, a bond that's government guaranteed, after adjusting for its risk. Of portfolios with 5% allocations to Bitcoin, the Sharpe ratio is increased by 5 to 7 times if you look at column 8.
The higher the Sharpe ratio, the better. And as a hedge fund manager and portfolio manager, my father would often look at Sharpe ratios of various investments and strategies he had. And as we said, if you can increase your Sharpe ratio, that means your risk is decreased and your upside potential is increased.
And the last chart here is about market correlation. Again, one of the things that our clients talk about all the time is, well, Bitcoin goes up when things are good and everything's going up, and it goes down when things go bad. And as Jason pointed out, in early March, Bitcoin fell with the rest of the global markets, but then divorced itself from that. But here's a correlation study. Adding a 5% Bitcoin allocation to a traditional portfolio lowers the overall correlation to the US equity markets by some 35%. You can see this in column 9.
So from a portfolio theory perspective, if you can find an asset that appreciates during the biggest crisis in over a century, during this pandemic year of 2020, you should probably consider owning it in your portfolio. And now we'll look ahead a bit.
Paul Tudor Jones is one of the great investment managers of our time, one of the first hedge fund owners. And a couple of quotes from Paul. He said, the most compelling argument for owning Bitcoin is the coming digitization of currency everywhere, which has been accelerated by COVID-19. Owning Bitcoin is a great way to defend oneself against the great monetary inflation. And what he means by the great monetary inflation is central bank policy, modern monetary theory, which postulates that all fiat currency is on one giant balance sheet. And through any problem, given that everyone will take fiat currency, all you need to do is move a decimal point on the balance sheet and you can print money. What you're doing is trying to create inflation. It hasn't worked the past 10 years. It may well work the next 10 years, but if they create inflation, that is the greatest single positive that Bitcoin could ever have.
As a hedge against inflation. So Paul Tudor Jones in May of this year released a report that his hedge fund, Tudor Investment Corp, just invested in Bitcoin. He wrote a 10-page report, and 8 of those pages were about Bitcoin. He said it reminded him of gold when he first got into the capital markets business in the 70s. And as you can see in this chart on the right, it's an analog of gold versus Bitcoin. He took gold from 73 through about 79 and compared the exact chart of gold in dollars per ounce to Bitcoin in dollars per Bitcoin. And as you can see, the charts, Bitcoin is pretty much following exactly what gold did during that period. Obviously, based on the chart and what we know today, gold rallied significantly to nearly $2,000 per ounce, and he expects Bitcoin to do the same.
Bitcoin having a similar thesis to gold is interesting because it's our thesis that as Bitcoin gains investors, and there are over 50 million unique users of Bitcoin today, unique wallets. 50 million people own Bitcoin today globally. But we think that Bitcoin is going to take away market cap from gold. And the reason for that is Bitcoin is a technology, whereas gold is a thing with 5,000 years of history, and Bitcoin is an asset class with 10 years of history. Bitcoin costs nothing to store, costs nothing to use. Gold costs a fair bit to store, is virtually unusable. You can't spend it. You can't transport gold, where Bitcoin, you can walk through borders with just a code in your head and not have fear of your assets being confiscated, which is one of the big points in the third world that we're constantly asked about. Even in the first world, there's an important story about seizure, and the concept of money being able to be seized by the US government is very real. The seizure laws suggest that if the entities, meaning the police or the government, thinks that that your money is illicit or to be used for drugs or smuggling of any sort, they can take the money. We have some friends who were professional poker players, left Denver to go to the World Series of Poker in Las Vegas. They had $100,000 to buy entry fees in Vegas, were stopped by the cops. The cops took the $100,000. They proved that they had hotel reservations. They proved they were professional poker players. They proved that they paid taxes on poker over the last number of years. 5 years later, the government still owns their money. And at this point, there's little they can do about it. Bitcoin solves that problem, and that's a real life problem.
And the other thing that I'd like to add on this topic on Bitcoin taking some of gold's market cap going forward is the concept of the, as Paul Tudor Jones said, the coming digitization. And if you think about the youngest generations that are being born today and tomorrow, they're growing up in an increasingly digital world where there's iPads in babies' cribs, and every young kid and tween, they're all on their phone or iPad, and everything to them that they interact with and engage with is digital. Even money, look at Venmo, look at PayPal, look at Zelle and QuickPay. A digital currency such as Bitcoin is, you'd have to think logically, more appealing to that younger generation that will be the future adults and rule in this world one day than an antiquated, heavy, non-transportable metal such as Bitcoin. They would ask themselves, why does this shiny metal even have the value that my parents says it has? Because that doesn't make sense to me. Everything's online, the gold's not online. So we believe over the coming decade plus that Bitcoin will take sum of gold's market cap. And as you can see, the implications on the potential valuation and pricing of what Bitcoin can be worth per coin
Relative to gold.
relative to gold are pretty significant.
So, we constantly ask ourselves, who's the next buyer of Bitcoin? Okay, there are 50 million users today, a population of the world's 8 billion, 2.6 billion are unbanked, meaning the third world has a great number of people who don't have access to a credit card, don't have access to a bank account. It's not really important that members of the Harmony Club use Bitcoin. You've got a credit card, you've got the ability to get money when and if you need it and spend it how you want it. That doesn't necessarily exist in the rest of the world. But the next buyer, who's it going to be? And this August, something tremendously important happened. Michael Saylor, the CEO and founder of MicroStrategy, an AI company with some 2 billion in sales last year, decided that it was important to look at their treasury reserve assets. And he decided, as chairman of the board, along with his board, that they would put originally 250 million of 500 million reserves into Bitcoin. His comment, the chart says 425 million, and that's because this morning they added to it.
Yeah, sorry, this says 250 million here, but only moments ago we found out that they added to that investment. So the number should really read $425 million of their capital reserves are now allocated to Bitcoin.
So he said, this investment reflects our belief that Bitcoin is the world's most widely adopted cryptocurrency, as a dependable store of value and an attractive investment asset with more long-term appreciation potential than holding cash. As noted, if you hold $100 for 10 years, you have $82 left today with 0 and negative interest rates. Mr. Saylor went on to articulate the opinion. He said, we find the global acceptance, brand recognition, ecosystem vitality, network dominance, architectural resilience, technical utility, and community ethos of Bitcoin to be persuasive evidence of its superiority as an asset class for those seeking a long-term store of value. Bitcoin is digital gold, harder, stronger, faster, smarter than money that has preceded it. We expect its value to accrete with advances in technology, expanding adoption, and the network effect that has fueled the rise of so many category killers in the modern era. What this did is this alerted the treasurers of global corporations that they need to think about their reserves. What do they have when you're buying back your stock and putting money into cash in your corporation? What are you telling your shareholders? And this articulation was profound, and it represented to us a new class of buyer of Bitcoin.
So with that, we'd like to stop here and open it up for questions. If anyone has any questions, please feel free to ask us. Here's our contact information, and this is our website if you want to learn more about our business and what we do. But
our website is stock full of articles that both we've written and we've placed. The Paul Tudor Jones article is there. Michael Saylor's comments are there. Stock full of information, probably a deeper dive than you need to take, but it's a good place to start.
Can you tell us how to invest in Bitcoin?
Can you repeat the question?
Can you tell us how to invest in Bitcoin?
That's what our business does. It's, if you're going to put a couple $100 or maybe a couple $1,000 in, then we would tell everyone in the US to download the app called Coinbase, or you can go to the website coinbase.com. However, if you're high net worth and you're looking to put above $20,000 worth of Bitcoin, money into Bitcoin, then it becomes much more complicated, and Coinbase does not handle that volume efficiently. So that's where we come in, and it's a process of opening a digital wallet, opening a brokerage account with an OTC, over-the-counter market maker, and acquiring Bitcoin that way, and safely putting it in your wallet. So
The word safely
Could
is,
we have an account with you and you do this for us?
we help you create an account in your own name, so that way you don't depend on us or a bank or anyone else. And yes, so you essentially, you open up an account with our help, and we help you invest.
but one point. What we're interested in, what you should be interested in with this investment is security. We started our business to help people be able to enter this space safely and securely. We do not come in contact with your Bitcoin. You become your own bank. You have your own codes. We never see them. We create a relationship with a market maker that you would buy your Bitcoin through. We will help you then store it securely with redundancy so that you can't lose your keys, you can't lose your codes. There's a wonderful book written by the Winklevoss twins of Facebook fame. It's called Bitcoin Billionaires. They didn't write it. It's about them, and it tells the story of when they got in 2012-13. They bought roughly 1% of the outstanding Bitcoin in the world, and they deposited their codes, their keys, in 10 different banks across the United States in safe deposit boxes, so as to have security. And that's what they needed to do at that time to make this a secure investment.
And it's a much easier way to invest these days. And that's, we would help all of our clients, and you included, with figuring all of that out, so you can safely and securely invest in this digital internet money and
not be afraid of being hacked or anything.
Be able to sleep soundly at night.
Is your firm a member of FINRA or some other regulatory organization?
No, we're a consulting firm. So the answer is no. We do not manage money. We're not a fund. We're not an investment manager. We're a consulting firm that works with clients to help them set up accounts in their own name. So as a result of being a consulting firm, we are not we're not on FINRA and any of the other licensing body and regulatory body lists. And
our edge and our advantage in being in the space is Jason created contacts from 2014 when he was a hedge fund manager in the cryptocurrency space. All these people have morphed into the OTC market makers, starting their own firms within the space of cryptocurrency. And we have relationships where we get edge pricing, and we have the ability to create what's needed in very much the state-of-the-art method of today. So we figure we're fee-based in our approach to our business, but we save our clients money by getting pricing that comes between the wall and the wallpaper. If you go to Coinbase, the actual spread between what the mid-market on Bitcoin is at any given second, and it's a live market. I mean, Bitcoin right now is trading mid-market $10,788 per coin. But if you wanted to invest X amount of money, there's a spread to that. We get in between that spread because of our relationships, and that's our edge.
You mentioned that you worked with you work with an OTC market maker. Can you tell us? Oh, okay. So it's not just one firm?
No, we put a lot of our bids in competition with various OTC dealers as to find the lowest price at all times.
What do you see as the trajectory of the Bitcoin going forward?
That's easy.
Yeah, we're bullish.
We think now is such a special time for Bitcoin, with the central banks of the world devaluing fiat currency as fast as they can. Where are you going to put your money? I think equities continue to go up. If you look at the past 30 years, really, it's been led by technology. Bitcoin is the essence of a technology movement. And we think that because fiat is getting depreciated, equities are trading on their highs in terms of former PE ratios. People are looking at alternative assets. Real estate is clearly going to be a beneficiary, but those of us in New York are looking at the major cities of the world And real estate's going to have to reinvent itself before it again attracts capital. REITs are struggling a little bit here, but the beneficiaries are the alternative assets. And what are alternative assets? It's a really decent question. You know, if you look at the millionaires and billionaires of tomorrow, and there will be more tomorrow than there are today, they're all buying the same things. They're buying cars, they're buying wine, they're buying art. As investments, they're buying private equity, venture capital, they're buying technology stocks, and they're buying Bitcoin. Bitcoin is non-correlated. That's a real plus. And Bitcoin is a beneficiary of the policies of the central banks of the world today.
Thank you.
I'm sorry, one more question. So the way this would work, I'm just trying to understand it. The way it would work is if I wanted to purchase Bitcoin through you, you would actually do the transaction?
I was just
So,
calling to
no.
find out regarding the
The way it would work is as follows. We would, during this COVID era, do a screen share like this through Zoom. And I'd help you set up your own cryptocurrency wallet in your own name with your own passwords that we have no knowledge of. When we're finished with that, we'd then set up your own relationship with an OTC or multiple OTC dealers, depending on your preference. Again, you'd be sharing your screen and I'd be helping you click through all of the various screens and onboarding. And essentially, like opening a brokerage account, these OTC dealers, over-the-counter market makers on the sell side of cryptocurrency, they need to do their due diligence on you from a compliance perspective, their KYC, know your customer, and AML, anti-money laundering. So you apply.
It's not much different than opening an account at JP Morgan.
Right, or Interactive Brokers or Fidelity. So you apply, we help you through that process. Once they onboard you within a few hours to 24 hours, then you are ready to do a trade. At that point in time, we would jump on a conference call with you, as well as a dealer or multiple dealers, depending on what you're looking for and what your preference is, where we then tell them, introduce you, you're now onboarded and signed up with their platform, and you're looking to make a purchase of, let's say, $100,000 in Bitcoin. They'll give you an offer, a price, and you can either take it or not take it, depending on what price you're looking for. And once the trade is complete, done and dusted, I then help you enter your blockchain, your Bitcoin wallet address on the dealer's platform so that they can send you the Bitcoin you just bought to your wallet correctly, safely, and securely. And you then have to send them a wire for the amount of money you just made a purchase in.
You'd receive that Bitcoin once they receive the wire. These are trusted parties on our part, and we've never had a problem with any client.
The entire
Does
process.
that change if the loan's being brokered?
I'm sorry?
This could be a stupid question, please.
It's okay. Please ask. I
Yeah,
didn't.
there
I
are
didn't
no
catch it.
stupid questions, but we didn't hear you.
Can you
I'm
repeat
sorry?
that question? Just unmute your speaker, if possible. Whomever asked that.
All right, continue. I'm sorry.
So the whole process would take about four or so hours from start to finish, from opening your account and ultimately making a transaction and transferring the cryptocurrency into your secure wallet, and helping you set up a redundant method for your password management, storage of private keys and passwords, and all of that stuff. So that's essentially the process that we do as our consulting firm with.
Thank you.
We have 10 more minutes. If anyone has any more questions, please.
Or thoughts or observations.
Questions, comments, concerns. The website is posted in the chat feature. So if anyone wants to scroll through or ask a question in the chat feature, you're welcome to do so as well. That was very informative. I learned a lot. It's making me wanna...
And Melissa, we have a PDF version of the deck we presented today, which we'd be happy to share with anyone who's interested.
Excellent. Thank you.
How do we get that? Are you going to disseminate it, Melissa?
Yes, so we actually recorded this session as well. So there's access to revert back to this in a recording format, and we'll circulate that to the membership. Once you log in through the Harmony Club website, there's a virtual clubhouse and it has all our recordings as well.
But does it have the PDF on it?
Yes, it'll have the PDF, but then we could disseminate as well from the deck that will be provided by Jason and David. All right, guys?
Yeah, perfect.
All right, so then we could send that along too.
Thank you.
Great.
Anything else?
So maybe one overall question.
Sure.
With all the cyber stuff that's going on these days, even in revealing some of the government's most secrets, how is it that we know that Bitcoin is not hackable?
So Bitcoin is the counting ledger that powers Bitcoin, called the blockchain. Think of it like an Excel spreadsheet, an accounting ledger with a sender of each transaction, a receiver, the amount they send, the date in which they send it, and then there's a message field. And that spreadsheet is on the internet, sort of like Google Sheets, where anyone can view it in real time. If you make an edit to it, anyone who's viewing it can see there's an edit happening right now in real time. And that spreadsheet, that blockchain, the Bitcoin blockchain, is currently on about 75,000 different computers around the world that are all connected to the internet, all viewing this spreadsheet in real time. If someone tries to tamper with that spreadsheet, everyone will see it at the same exact time, and they will cross-reference using their computers whether what they're seeing is valid or not based on the cryptographic rules that power Bitcoin.
So that spreadsheet contains every transaction ever made from the first transaction in 2009. So it is a real-time field that has all information.
And so basically it can't be hacked because you can try to hack it, but all the 75,000 different computers, which are called miners, are constantly viewing and disregarding attempts at manipulating the spreadsheet. They are just looking at the longest chain, at the one that at the spreadsheet that everyone is agreeing on, and it's constantly being updated every minute, 24/7.
There's more computing power focused on Bitcoin than any other project in the world, period.
Yeah, and so no one has enough computing power to tamper with all 75,000 computers simultaneously. And that's how you know.
Thank you.
Yep. Any other questions?
Thank you.
Great
so much.
presentation, guys. Really great.
Thank you. Again, thank you, Melissa and Harmony Club for having us. And feel free to reach out to us. We have our email and phone numbers here. And happy to have an offline discussion with anyone who might want one. And like Melissa said, we'll provide her with a PDF version of the presentation we gave today so that you can all view it.
Thank you so much. We hope that we could have you back at the clubhouse one day.
Look forward to that.
Absolutely. Very much looking forward to it. And thank you everyone for joining us on this afternoon's cryptocurrency event with Jason and David Leibowitz. We are so happy to have you on the screen and hope to see you all safely in person soon. Have a